So, well, we're pretty much talking about it. Bankers versus, or brokers versus a bank. Well, you mentioned these segments that you specialize in. How do you do it differently than a bank would? Is there a different process, or do you just say...
Well, the process is basically understanding what a bank is and what a mortgage broker is, and just being able to define the two areas. A mortgage broker is a person that is in between the lender and the client. We gather your information, we understand, we assess your situation, we help you put this into a proper perspective, and then we go out there and shop for you. So we have access to a lot of lenders, which comes from a lender from the typical top 5 banks to then our broker-friendly lenders. And what we do is we help you and tell you exactly how we can bring your deal to the lender specifically. So the difference is understanding what a mortgage broker does versus what a bank does. Did you know that almost 45% of Canadians are actually using mortgage brokers nowadays versus 10 years ago that there were only 15% using it? So a lot of the consumers, the Canadians, are getting more adjusted or getting adjusted to using a mortgage broker. Why use a mortgage broker? Because a mortgage broker is there for you. It's accredited. A mortgage broker has to be licensed. There's a lot of accreditation, a lot of education that has to be behind what a mortgage broker does versus what in the banks, right? So understanding the needs of a mortgage broker is very crucial. And guess what? We get paid by the lender. We do not charge a fee for our services if we take you to a bank, right? So this is where a Canadian has to understand is a broker is a trusted individual that is educated, that understands your needs, and all we do is focus on credit aspects of it.
And with respect to the process, Joe, like we said earlier, we realize working with clients that every client's situation is very unique. We cannot take everybody and put them in one box and say, show us the numbers, let's punch the numbers, and here is the rate that you qualify for. It basically boils down to understanding the client situation. And to take it even further, we find very unique differences across the segments that we deal with. For example, real estate investors. A lot of the investors we deal with either want to start investing in real estate, it's their first property, or they already have several properties and they want to build a portfolio of real estate, either for wealth building or to generate cash flow, whatever their underlying reason is. And the process on how we go about talking to that clientele is very different than the process that we use to talk to a first-time home buyer. Because we need, with a real estate investor, to understand what their long-term view is and where they are today with their financial plan and how they're going to actually get there, so that both ends and I can help them on the back end from a financing point of view, structure their deals, and also form a foundation on which they can continue to build properties or acquire properties. First-time home buyers, very different talk. It's about educating the first-time home buyer on what's involved in buying a property. What are the closing costs? What are the upfront costs? What are the holding costs? What does home ownership mean? Couples going through divorce and separation, again, very different discovery process and very different story. Couples here are talking about either wanting to, one of them wanting to hold on to their current property, or both of them going on their own, either one acquiring, one renting. There are a lot of legalities involved where we have to engage other experts in the process, and therefore our process is very tailored to the niche that we're talking to.